salaries for state and central government employees, operation of the government, public transportations, all these purposes they require the taxes. So that's the reason why the tax system we have in India. So as I told already, it is a direct and indirect taxes. Now coming to the direct tax, under the direct tax, earlier we used to have income tax, wealth tax, gift tax, corporate tax. Now income tax is a tax which is levied on earnings of a person. And earlier, the wealth tax is being levied on all the assets, but now it is being clubbed under the income tax only. Gift tax was already abolished. Those provisions are also included or clubbed in income tax. Now we have a corporate taxation, income taxation, everything comes under a direct taxes. Now, coming to the indirect tax, earlier we used to have indirect tax as excise duty, customs duty, central sales tax, AP general sales tax, because that time the AP is also not formed before 1950. We have Madras general sales tax. In 1947, when we got an independence, before the independence, British people they implemented a sales tax. After the independence, we doesn't have any basis, so we used to follow the British General Sales Tax Act. Once the Madras has been formed, so it has been treated as a Madras General Sales Tax, because AP, whatever the Telangana AP is under the control of Madras state. So the Madras people, Madras government has implemented Madras General Sales Tax Act. Once in 1950 AP has been formed, then we have enacted rather AP General Sales Tax Act. That is Andhra Pradesh General Sales Tax Act and CST, that is Central Sales Tax Act. So when the state has bifurcated in the year 2014, so we had the Telangana Value Added Tax. General Sales Tax Act uh, was abolished, and in that place we got VAT. So earlier we used to have AP VAT. In 2000, I think in 2015 onwards, GST has been framed. In 2014, we used to have Telangana VAT, and in 2015 onwards, we have VAT. And after that, we used to have uh, GST. That is 2017 onwards, GST when it has been implemented. So GST has been followed. And usually in BJP government, they always say that it is one nation, one tax should be there. We used to have n number of acts like Excise Act, Customs Act, CST Act, GST Act, like so many acts, octroi duty they used to collect. Uh, so taking all this into the account, they thought that it is too many complications which are taking place for the following of the people. Every act they have to go through, see the provisions, accordingly the payment of taxes to be made, which is a very a crucial, complicated, and a multiple tax. This has been levied. That is the reason why the government has thought it should have only one act. They thought of implementing direct tax code, and they have also implemented GST. But direct tax code somehow it is not materialized. Rather, we have the same income tax act, but where wealth tax, gift tax, and corporate tax has been added in that. Whereas in the indirect taxes, now after implementation of GST, all the taxes are subsumed, and now it is only a single act we have, that is GST. Now, coming to the GST, we need to know. What is the differences between the sales tax and a VAT? Also, you need to know, because a journey of GST before to start with. So you need to know what is sales tax, what is VAT. Now, sales tax is levied on sales of the goods. whereas VAT is levied on any value addition. Uh, Coming to the multiple point of tax, sales tax is being levied based on the multiple point of tax. VAT is not a multiple point of tax. It is only a single point of tax which is being levied. Now, in sales tax, it includes the cascading effect, whereas in the VAT, they want to eliminate the cascading effect. That's the reason why first they have implemented the VAT, then they have converted it to GST. Now, maintenance of books and records under the sales tax is not a mandatory. So, usually people may maintain, may not maintain. It all depends upon the way they are used to do. So, that's the reason why the sales tax has not given a directions to the persons or the dealers to see to it that the VAT, that books are to be maintained compulsorily. Whereas under the VAT, they are supposed to be maintained. Compulsorily, they have to maintain in case if they want any benefit or a privilege under the tax policies or the act, automatically they are supposed to file the records. So that's the reason why there is a need that they have to maintain the books and records of compulsory. Now, coming to the GST, it is an indirect tax, no doubt about it. GST is an indirect tax. It is actually GST. It is a abbreviation actually. G means goods, S is services, a tax. Goods and services tax. The full form of GST is goods and service tax, which is a indirect tax. Now, the GST Act was passed in the Parliament on 29th March 2017, and the Act came into the effect on 1st July 2017. It is a comprehensive multi-stage destination-based tax, and it is levied on every value addition. The law has replaced many indirect tax laws that previously existed in India, like excise duty, additional duties of customs, cess, state VAT, central sales tax, uh, purchase tax, luxuries tax, entertainment tax, entry tax, tax on advertisement, tax on lotteries, betting, and gambling. Now, GST is one indirect taxes for the entire country. That means one nation, one tax. Its main objective is to consolidate all indirect taxes except customs, which is replacing a multiple tax basis. Many countries have turned into the GST, the models to reap the benefits of the GST in terms of a growth, revenue, and a price stability. There are around 160 countries in the world that have implemented VAT or a GST. Now, 7 countries in ASEAN, 19 in Asia, 53 countries in Europe, 7 in Oceania, 44 in Africa, 11 in South America, 19 in Caribbean, Central and North America. So these are the states which they have implemented the GST. The France is the first country which has implemented the GST in 1954, followed by the Germany in 1968. UK started in 1973. GST is a unified tax system in most of the countries, but Canada, Brazil have a dual GST like India. India is a federal system, the federal state, so automatically they cannot have a single point of tax. That's the reason why we have a dual system. The dual system is consisting of IGST, CGST, and SGST, so which has been implemented in India. Now, the Malaysia country also has implemented GST in 2016. Now, coming to the various types of GST framework from country to country, it varies. Australia adopted the least neutral, New Zealand most neutral, while Canada GST was intermediate. The inflation rate in the most of the countries have stabilized at a lower rate after implementation of GST. Uh, GDP, the growth rate, fiscal balances, current account balances, etc. Uh, Tax GDP ratio have improved in most of the countries. Now, coming to the Indian experiences, uh, now why we want to implement the GST in the country. First of all, we need to see to it what are the benefits we can able to get out of GST. One is simpler tax system. When we are implementing a GST, the GST has a simpler tax system which is easily followed, understood by every citizen of India. First is that. The second is the elimination of cascading. What is cascading? Cascading here means tax on tax. Earlier, when it is a sales tax, the people at the manufacturer, as and when he has purchased the raw materials, he has to pay the tax. Once the raw materials is converted into a finished product, for the conversion, he has to pay the tax. When he's selling, he has to pay the tax. If the commodities are transferring from one area to another, municipal taxes like octroi duty is supposed to be levied. So, like at every point, if it's exporting the goods, then the central excise, because manufactured, as and when the goods are manufactured, so excise duty is being levied. And if it is being imported, then customs duty is being levied. So, like that, every point of time, there is a tax which need to be implemented. But when GST is being implemented, we are avoiding, and we will say only at the time of a sale, the tax will be implemented, but not at every stage. So it's a reason why a tax on tax will be eliminated. So that is one of the reason why GST is to be implemented. The next, uniform prices. Now, throughout the country, we should have only the same price for same product. Now, earlier, under the sales tax only, if you might have seen Bambino or any other product, they used to give on the label stating that in AP, this is the cost. In Maharashtra, the cost should be so and so. In Tamil Nadu, the cost should be so and so. Why? Because different states have different sales tax act. Accordingly, the rate of tax differs. So, if the same product manufactured by the manufacturer but distributing to different country, different states, then according to their state level tax, they are supposed to increase the price of the product. Now, it is not like that. The product is same, whatever may be the state, wherever it is being sold, the, the value, the price should be charged same. That is the reason why a uniform prices throughout the country can be implemented if GST is being implemented. The next, transparency in taxation system. Now, transparency is what you're doing should be known to everyone. So it should be clear so that everyone can be able to understand and everyone can able to uh, tax. They know where at which point of time the tax can be levied, why it is levied, what purpose, what rate, all that will be clearly known. So that's the reason why it is having a transparency in taxation system. The next, they also say increase in employment opportunities, like the levying of tax, collection of tax, the taxpayers, the tax filing of the returns, all that the people supposed to do. So if one is unable to do, the other one will be able to help them. So in how that employment opportunities can be increased. So that's the reason why they say that it is useful for the citizens. That's the reason why GST has been implemented. The next, coming to the how does it is implementing or advantages towards the trade and industry. Now, first is reduction in multiplicity of taxes. So you are not paying the taxes at every stage, you are paying at a single point of time. So it's the reason why it is a reduction in the multiplicity of taxes. Then mitigation of double taxation. So double taxation, if you can avoid, if you know only a single time if the taxes are being calculated and levied, then it is very easy for everyone can be able to understand. Even the manufacturer is also happy. The next, coming to the neutralization of taxes, especially for exports. Now, usually the Indian government encourages the manufacturers who are producing the goods for the sake of export. Why? Because we can enter into the international markets. We can prove ourselves. The quality can be known, and the product, the brand image can be improved. The country image can be improved. National income can be improved. So automatically, you can see to it that the manufacturers can be given a motivation and encouragement in not taxing them. Rather, they can be encouraged to send the goods for the exports. So automatically here what happens is it is more efficient for them because GST they know very well, then the implications can be taken care of. The next, development of common national market. So you can have a normal common market where the goods can be supplied, the goods can be sold. Then for the central and state governments, how does it is being advantages? One, they always say you can boost the foreign investment. Uh, and in India also, the Narendra Modi said the Make in India is a brand now. So India has a brand, and that brand image can be taken care of. The next, we take into the account you can boost the exports, manufacturing activity, generation of more employment, leading to the reduced poverty and increased GDP growth. All this is possible in case of Indian government. Not only this, overall investment which can be improved in the development of the state, which is a benefit for the country. The next, uniform in SGST, IGST rates to reduce the incentive for the tax evasion, reduction in compliance cost, no requirement of multiple records to be maintained. So all these are the benefits for the implementation of GST. Right. Now, the next, they also say uniform tax rates you can have, easy compliance can be taken place, gain to manufacturers and exporters, simple and easy administer, better control on leakages. So all these you can easily possible through the implementation of GST. The next, they say that uh, what are the challenges relating to the GST? Yes, as soon as the GST has been implemented, they could not able to implement as they thought as they could able to. But here, what they did here is they have taken many times to implement, but they could not do so. So the framing of time rolling, etc., has taken place because of implementation of GST. They thought from 2015 onwards they have to implement, but they did it at 1st July 2017 onwards. Now, infrastructure, technology upgradation of tax system, all that is required because the once the GST is being implemented, now it is GST supposed to be filed only on online. So the people need to know, they need to be educated, they need to be know how it is to be filed because the tax compliances, everything, the filing, all that need to be known through online. So the people should be aware of doing such things. They should be capable of having the infrastructure. So that is very, very needed, and upgradation of technology is needed. The knowledge is required. So IT systems for the trade, the industry, upgradation, all that is a very big challenge. So before implementation, even in the after implementation also, the many of the industries automatically they were struggled a lot in implementing the GST, maintaining the books of accounts, filing the returns. Even today also, it is very a tough job for them. They could not able to get a perfection based on how a tax returns to be filed under the GST. Why? Because here the people who are doing are very less. The people who are doing with correctness, that is more important. That means without any mistake, they could able to do it properly, then the problem will not be there. If not, a fine or penalty can be levied. So they are worried about that. That's the reason why. So filing of a return under the GST is not so easy task. So automatically it is one of the challenges undertaking the traders, the industry, the industrialization, the people, everyone, common citizens also, if they take into the account, if they are doing some business, they are supposed to maintain the books. If you are not maintaining the books, then automatically you are unable to prove what taxes are supposed to be payable. Everything need to be recorded. If nothing is recorded, then earlier it was allowed, but now after the implementation of GST, the maintenance of books, and that too electronically, is more important. So that's the reason why day-to-day transactions supposed to be recorded through electronically, and it is to be properly recorded, and the GST is to be calculated properly and to be filed properly. So all these becomes challenges for the people who are dealing with GST. Now, coming to the constitutional framework relating to the GST, earlier in India, we have a constitutional framework. We used to have three different lists. One is a union list, state list, and the concurrent list. Union list is the laws or whatever the policies which are being framed by the central government. Only the central government has a power to enact such things, and which is being passed in the both the houses of parliament, because once it need to be implemented in the country, they are supposed to pass the bill either of the both in the Lok Sabha and Rajya Sabha under the parliament. Once it is been approved, enacted, and implemented, so that comes under your central list. Now, coming to the state list. Now, the state assembly has a power to enact the bills, the power or the act. Like earlier, we used to have a state government, state general sales tax. So, only the state government has a power to enact such sales tax. So automatically those powers are being given under the state government. So the state government used to pass the bill in the assembly, enacted in the assembly, and then it has been implemented under the state level. Now the concurrent list is a list where it has both the central government as well as the state government will took part for the act to be implemented. So it is not just only the state government, it also central government interference will be taken into the account. This is actually the framework of the constitution relating to the whatever the act or the bill which is to be formed. Now coming earlier under the indirect taxes, central excise, customs, those things supposed to be enacted only by the central government, whereas income tax also will be enacted by the central government. The state sales tax will be enacted by the state government. Now, central GST, we used to have central sales tax that is enacted by the central government. Then excise, VAT, the general sales tax, then octroi duty. These are the luxury duty, expenditure duty, these things which we been enacted by the state level. So now when the GST is being implemented, now the constitution as enacted on 8th September 2016 with the following amendments. As per the Article 246A, the power of levy GST has been given to the Parliament as well as the legislature of every state. So CGST enacted by the central government of India, IGST has been enacted by central government of India, SGST enacted by respective state government, and Union Territory GST enacted by the central government of India. Now, IGST will be apportioned between the center and the state as per the recommendations of GST Council. GST will be levied on all the supply of goods and services except alcoholic liquor or for human consumption, tobacco products, and petroleum products. The liquor comes under the state excise. That's the reason why they are not included under the GST. Now, even the tobacco products, petroleum products also comes under the state excise. They will not come under the GST. The next Article 269A of the Constitution of India provides that the import of goods and services will be deemed as a supply of goods or services or both in the course of interstate trade or commerce. In case of import goods, it will be comes under the basic customs duty. Now, coming to the power to levy the central excise duty on goods manufactured or produced in India is available in respect of the following products like petroleum crude, high speed diesel, motor spirit, natural gas, aviation turbine fuel, uh, tobacco and tobacco products. All these comes under the levy of central excise duty on goods manufactured. Now, the power to impose the tax on sale of the following products uh, provided to the state government is petroleum crude, high speed diesel, motor spirit, natural gas, aviation, aviation turbine fuel, alcoholic liquor for human consumption, etc., will come under the state level uh, act. Now, uh, we have, as I told you, there are different types of GSTs. One is CGST, SGST, and IGST. Now, CGST is Central Goods and Service Tax. Now, this is levied by the central government of India. Whatever may be the transactions of goods and services which are taking place within a state, it is one of the two taxes charged on every intra-state. Intra is within the state transactions. And SGST, we have state goods and service tax. So here the state, whatever may be the taxes which are levied should be taken care by every state, because the sale which has taken place within the state. So here, like let us say VAT, state sales tax, entertainment tax, luxury tax, entry tax, state cess surcharges, or any kind of transaction involving goods and services. The state government is the sole claimer of the revenue earned under SGST. Now coming to the IGST. Under Integrated Goods and Service Tax, IGST is abbreviated. Actually, the full form of IGST is Integrated Goods and Service Tax. It is applicable on interstate transactions of goods and services as well as on imports. Now, the IGST, which has to deal only with union government and not with every state separately, right? So the whatever the taxes which are collected under IGST by the central government, it will not collect by the state government. It will be collected by the central government and will further be distributed among the respective states as and when it is required. Now, UTGST, that is Union Territory General Sales, Goods and Service Tax. Union Territory Goods and Service Tax. Here, Delhi comes under a Union Territory. Chandigarh comes under a Union Territory. Andaman Nicobar Islands comes under the Union Territory. Uh, Dardha and Nagara Haveli comes under the Union Territory. Lakshadweep, Daman and Diu, all these comes under the Union Territory. And these people, these states or Union Territories will follow the Union Territory Goods and Service Tax. Now, coming to the salient features of CGST, when you take the CGST into the account, every supplier shall be liable to register under the state or a union territory. A special category of states like Tripura, Nagaland, Uttarakhand, Sikkim, Himachal Pradesh, Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Jammu and Kashmir registration is required if his aggregate turnover exceeds 10 lakhs. So if at all it is exceeds 10 lakhs, they are supposed to be registered. Coming to the business entities, turnover up to 75 lakhs can avail the benefit of composition scheme, under which it has to pay a much lower tax of much lower rate of tax and has to fulfill very minimal compliance requirement. In order to prevent the cascading of taxes, ITC, that is, input tax credit, would be admissible on all goods and services used in the course or furtherance of business. Next, we need to talk about the IGST. As I told you, it is an integrated goods and service tax, which has been enacted the bill and introduced in Lok Sabha on March 27th, 2017. Now, features of IGST, if you take into the account, earlier the central sales tax now comes under IGST. Now, this whatever may be the goods which are been taking place between the two states, we call it as interstate trade or commerce or interstate supply of goods and services, imports and exports, supplies and to and fro from economical, special economical zones. Supply includes sale, transfer, exchange, lease made for a consideration to further a business. All that comes under IGST. Now, the revenue which is collected by under the IGST is by the central government, and it will be apportioned between the center and the state. Now, IGST is an intermediary tax mainly on business to business transactions. It is also paid on business to consumers transaction. The state where the goods and services both are consumed will get their share of SGST. Now, IGST rate is double the CGST rate and will be uniform all over the India. Now, coming to the input tax credit, under the SGST shall be allowable for exporting states. So, the states which are exporting their goods can allow ITC. Now, coming to the SGST. Under the SGST, that is state general sales, state goods service tax, it is SGST. Each state has passed in its own state GST Act in 2017, and here the first Telangana government has formed on April 9th, 2017. In Bihar, April 24, 2017. Rajasthan in April 26. Jharkhand in April 27. Chhattisgarh is on April 28. Uttarakhand on May 2nd. Madhya Pradesh passed the bill on May 3rd. Haryana is May 4th. Gujarat May 9th. Goa May 9th. Odisha May 11th, Assam May 11th, Arunachal Pradesh is May 12th, Uttar Pradesh is on 16th May, Andhra Pradesh is on 16th May, uh, Puducherry is on 17th May, Maharashtra in 22nd May, Tripura in 24th May, Sikkim is 25th May, Mizoram 26th, Nagaland 27th, Himachal Pradesh is on 27th, Delhi is on 31st May, Manipur is on 5th June, Meghalaya 12th June, Karnataka on 16th June, Punjab on 19th June, Tamil Nadu on 19th June, West Bengal take an ordinance route for GST on 15th June 2017. Kerala take an ordinance route for GST on 21st June 2017. So these are the states has taken accordingly in 2017. So all these comes under the types of GST. Now coming to the taxes which are subsumed under the GST is like customs, central excise, then APGST, CST, all that comes under the tax subsumed under the GST. Now, coming to the next is about the GST Council. Now, before the implementation of GST, Constitution 122 Amendment Bill was introduced in Parliament and passed by the Rajya Sabha on 3rd August 2016 and Lok Sabha on 8th August 2016 by more than 15 states. Thereafter, Honorable President gave an assent to the Constitution 101st Amendment to form a GST Council. So the GST Council was to be constituted by the President within 60 days of the commencement of the Article 279A. Now, the Union Cabinet under the chairmanship of the Prime Minister, Shri Narendra Modi, approved setting up a GST Council on 12th September 2016 and getting up its secretariat as per the following details. The creation of GST Council as per the Article 279A for the amendment of the Constitution. Then creation of GST Council Secretariat with its office at New Delhi. Appointment of Secretary as ex officio Secretary of the GST Council. Inclusion of the chairperson of the Central Board of Excise and Customs as a permanent invitee to all proceedings of GST Council. Create one post of additional Secretary of GST Council in the GST Council Secretariat and 4 posts of Commissioner in GST Council Secretariat. Here, coming to the one post of additional secretary at the level of additional secretary to the Government of India is one. And coming to the 4 post of commissioner in the GST at the level of joint secretary to the Government of India. The cabinet also decided to provide the adequate funds for meeting the recurring and non-recurring expenses of GST Council Secretariat, the entire cost for which shall be borne by the central government. The GST Council Secretariat shall be manned by officers taken on deputation from both the central and the state governments. Now, who are being designated personals under the GST Council? One is chairman. Chairman will be the Union Finance Minister, will be the chairman of GST Council. Then members, coming to the members, the Union Minister of State in charge of Revenue or Finance. One member from each state who is the minister in charge of finance or a taxation or any other minister. And a vice chairman, any one of them will be a vice chairman of GST Council who will be mutually elected by them. Now, GST Council meeting has been taken up. So they have formed into a quorum. They have taken a decision by majority, uh, weightage to the central and states, decision of meeting not to be declared invalid. Coming to the various tax slabs also been implemented. One is 5%, GST slab rate 5%, 12%, 18%, and 28%. Now coming to the 5% slab rate under the GST, uh, these uh, these are being levied on the goods of basic amenities which are covered such as sugar, oil, spices, coffee, coal, fertilizers, tea, Ayurvedic medicines, agarbatti, dry mango slices, cashew nuts, sweets, handmade carpets, lifeboats, fish, fillet, uh, unbranded namkeen, and life saving drugs are covered. Now, coming under the services under the same slab, railways, airways, takeaway food, AC and non AC restaurants, hotel rooms with a tariff less than 7,500 rupees and a special flights for pilgrims. Now, GST slab rate of 12%. Under that, the products like cell phones, sewing machines, umbrella, jewelry box, along with processed foods like frozen meat, fruit juices, butter, cheese, ghee are covered. Now, coming to the services which are included under rate of 12% is business class flights tickets and movie tickets below 100 rupees. Now, coming to the slab rate 18% if you take into the account, under the slab products, hair oil, safety glass, pasta, pastries, ice cream, mineral water, hair shampoo, oil powder, water heaters, washing machine, detergent, sprays, leather clothing, uh, cookers, oil powder, uh, cutlery, binoculars, artificial flowers, wristwatches, suitcases, briefcase, shaving, aftershave, furniture, stationery items, mattresses, monitors, television screens, batteries, video games are covered. Services which are covered are restaurants within the hotels whose tariffs are above 7,500 rupees. Actual hotel bill is rupees 5,000, 7,500. Movie tickets above 100. Now coming to the slab, GST slab rate of 28% is levied on 200 products which are covered like cars, cigarettes, durable consumer products, high-end motorcycles, pan masala, weighing machine, cement are covered. Now, the services which are covered under the same slab, that is 28%, includes racing, betting in casinos, actual bill of hotel, stay above 7,500 rupees. A special rate of 0.25% is levied on semi polished and cut stones. Now, there are certain things where no tax which is applicable on goods and services. It is a list is also been given. Rakis without precious metals, bread, salt, sanitary napkins, raw materials, eggs, basin, flour, natural honey, curd, sindoor, bangles, handloom, newspapers, stone, kajal, oat, rape, picture books, color books, manuscripts. All these are the goods. Under the services is hotels and lodges with tariff below 1,000 rupees plus IIM course books, bank charges on the savings account. So all this where the taxes are not levied. So coming to the various rates of taxes which are being uh, taken under the GST. Now coming to the next. topic will be, we have discussed about GST Council, we have discussed about the tax rates, the different acts, schedules also. Now coming to now the role of GST Council, if you take into the account, they say that a threshold limit would be 40 lakh for a special category states enumerated in Article 279A of the Constitution. Uh, then a composition threshold shall be 1 crore. And GST, this limit shall be raised to 1.5 crore after necessary amendments in the Act. The composition scheme shall not be available to interstate suppliers, service providers, and a specified category of manufacturers. Now, existing tax incentive schemes of central or state governments may be continued by a respective government by way of reimbursement through budgetary route. The next, there would be a 4 tax rates, namely 5%, 12%, 18%, and 28% for a different goods and services have been finalized and notified. The next, there are 5 laws, namely CGST law, UTGST law, IGST law, SGST law, GST compensation law has been recommended. Then all administrative control over 90% of taxpayers having turnover below 1.5 crore would vest with the state tax administration and over 10% with the central tax administration. Then powers under IGST Act shall also be cross-empowered on the same basis as under CGST and SGST Acts with a few exceptions. Now, the power to collect GST in territorial waters shall be delegated by central government to the states. The formula and mechanism for CGST or SGST compensation, the cess has been finalized. 18 rules on composition, registration, input tax credit, invoice, determination of value of supply, accounts and records, returns, payment refund, assessment, audit, advance ruling, appeals and revision, transitional provisions, anti-profiteering, e-way bill, inspection, search and seizure, demands and recovery and offense and penalties have been recommended and notified. Now, coming to the taxpayers which are following under different classes shall be exempted from obtaining the registration. Suppliers of services having turnover up to 20 lakhs, making interstate suppliers. Suppliers of services having turnover up to 20 lakhs, making supplies through e-commerce platforms. Now, a reverse charge mechanism, which has been suspended till 31/3/2018, which has also been taken care of. There shall be no requirement on payment of tax on advanced received for supply of goods by all taxpayers. And unregistered persons has been exempted from tax. Registration and operationalization of TDS and TCS has been postponed till 31/3/2018. So now it is taken care of. E-way bill system shall be introduced nationwide. E-wallet scheme shall be introduced for the exporters from 1/4/2018 till they get a relief from the exporter. Then all taxpayers are required to file a return form SGST 3B and pay taxes on monthly basis. Now taxpayers with turnover up to 1.5 crore are required to file information in Form GST or Return 1 on quarterly basis. The next other taxpayers, they can file the return monthly basis, but this person has to file the return on quarterly basis. Now GST return 2, GST return 3 for the months of July 17-18 would be worked out by a committee of officers. Now, late fee for a delayed filing of return supposed to be filed from GST 3B for the months of July 17 to September 17 has been waived. The amount of late fee already paid but subsequently waived off shall be recredited to the electronic cash ledger of a registered person under head tax instead of fee. So all these are supposed to be taken care of. Now, coming to the structure, I think we have to discuss in the next class. Okay. Mm, Coming to the functions of GSTN. What is GSTN? Here they state the GSTN stands for Goods and Service Tax Network. It is Goods and Service Tax Network, which is private limited company established under Section 8 of New Companies Act, which is incorporated on March 28, 2013. It is a non-profit, non-government organization which manages the entire IT system of the GST portal. The mother database for everything in GST, the portal is being used by the government to track every financial transaction and will provide taxpayers with all services from registration to filing taxes and maintaining all tax details. Now it has a common portal website managed by this Goods and Service Tax Network. Uh, this has been set up by the government to establish uniform interface for the taxpayers and a common and shared IT infrastructure between the center and the state. The GST portal is accessible over internet by taxpayers and their chartered accountants or tax advocates, etc. Internet by tax officials, etc. The portal is one single common portal for all GST related services. Now, the functions of the network is facilitating registration. It facilitates registration. Next, forwarding the returns to central and state authorities. The computation of settlement of IGST, matching the tax payment details with banking network, providing various MIS reports to the central and state governments based on the taxpayer return information, providing analysis of taxpayers' profile, and running the matching engine for matching reversal and reclaim of input tax credit. So all these services are being provided through the network, which is being linked between the state and the central government. Here, who are the stakeholders coming to here is state and union territory commercial tax departments, central tax authorities, taxpayers, banks, and other stakeholders. They all connected, linked one with the other. The ecosystem consists of all stakeholders, starting from taxpayer to tax professional to tax officials to GST portal to banks to accounting authorities. Everything is linked one with the other. So all this comes under your first block. The block 1 relating to the introduction. We have discussed constitutional framework. We have discussed Journey of GST we have discussed, the challenges and opportunities we have discussed, and okay, thank you. Now I'm leaving. If you have any doubts, you can ask me.